Good morning, traders. Today is Thursday, the 12th of August. My name is Neville Hornsey, market analyst with YouTrading, and today I'll be talking about the USD versus the Swiss franc. Okay, first of all, I'm going to start with the YouTrading.com heat map, and we can see that at the moment, the US dollar, the yen, and the Chinese yuan are the strongest currencies. The weakest ones are probably the Aussie and the New Zealand dollar. Canadian dollar is also kind of mixed. So at the moment, commodity pairs are weaker. The safe haven of the yen and the dollar is stronger. So I'm going to call this a risk off day today. So I'm not expecting equities to expand their ranges, and you're probably going to go sideways today. All right, going to the active trader platform, looking at the sentiment indicator, we've got 61% of traders actually shorting the USD versus the Swiss franc. And then on the monthly chart, we can see that from the sort of dot-com boom, the sort of following crash, we've had the US dollar coming all the way back down from 2000 all the way down to 2011. I've circled September 2011, and then I've circled again January 2015, because if we look to the euro versus the Swiss, these dates were particularly important because in September 2011, the Swiss National Bank actually intervened in the markets, and they pegged the Swiss franc to the euro at 1.2. And then in 2015, they unexpectedly removed that peg. This candle here, as you can see, is a very large range, and that was the time when retail brokers, retail traders, and even institutional traders lost a lot of money because the Swiss bank removed it unexpectedly, and it took the market by surprise. So we know that the Swiss National Bank do intervene in the markets. And if we go back to the USD versus the Swiss, here we can see that post 2015, the USD versus the Swiss franc basically went sideways for 5 years in between 1.25 and 0.925. Recently, obviously, we had the coronavirus. The USD did actually peak, and then the US dollar depreciated. And if we go to the daily, when we broke out of that 5-year range, the US dollar came down, it retested, found support now to become resistant, and then it carried on going lower. And if we go back to the weekly, and I stretch out the box from 2015. So that big move in 2015, when the S&P surprised the markets, that level acted as a demand level and support today this year. So in 2021, the levels back in 2015 that were found acted as support, and then we actually rose back up, got inside that 5-year range, only then to pull back. So when we pull back, we came down to this little balance area here, but also it was a Fibonacci retracement of 76.4%. So a deep retracement into this little balance area, and then we rose back up to test these levels that we saw for the 5 years acting as support. Now, my idea is for obviously the US dollar to appreciate. We've seen the US dollar find support at $90. The dollar index has risen higher. Yesterday, we had a slight pause in proceedings because of the CPI meeting expectations, but overall, the US dollar has been strengthening. The idea is that the Swiss National Bank obviously want to keep inflation for the Swiss economy under 2%. And if we look to the current rate of inflation is 0.7, but you can see that since the start of the year, the actual inflation rate is starting to pick up. So they'll be starting to sort of monitor the markets and intervene, no doubt. So this year, the United States removed Switzerland from its list of currency manipulators, despite the Swiss National Bank spending $119 billion into the foreign exchange markets last year. Now, the S&P will say that the foreign exchange market interventions and the associated expansion of the balance sheet are currently a necessary monetary policy instrument and have nothing to do with currency manipulation. The S&P said the franc remained highly valued and confirmed its strategy of negative interest rates, plus a pledge to use foreign exchange interventions if needed. So If the SNB think that the franc is highly valued, they obviously want to decrease that value. And if they decrease that value, that means they want the Swiss franc to come down and the US dollar to go higher. So SNB have got an interest in making US dollar versus Swiss franc go higher. And I would like to see over the next sort of month or so, this balance area get taken out. So we take out the highs here from July. And then we go up to at least test the swing high from April, March 2021. From then on, depending on what happens in the sort of dollar index market, if we go to dollar index, we can see that the USD's rising. We've still got some significant resistance to take out, but assuming that the dollar is going to rise in this sort of expanding sort of triangle up to the old support, now resistance of around $95, then we should see the US dollar get above this descending trend line, break out, retest, and then continue higher, and then sort of just at least trade into the middle of this 5-year range, if not to the highs of this 5-year range. So that's my current thinking. I think the SNB are going to help this along as much as they can. And the US dollar is appreciating because of the expectations of rate hikes and the economy doing really well. Okay, I hope that's been useful, and I'll speak to you again tomorrow.